Hello, I'm Hazem Seeker. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, oil sweet spot. What price does a barrel of oil have to be so that consumers and producers benefit? Also this week, Bitcoin's making headlines again, but the biggest names in finance can't agree on what it's worth. Plus, African and European Union leaders have condemned the refugee slave trade in Libya, but still no real details on how to stop the smugglers. So what is the ideal price of a barrel of oil? Well, that's something that OPEC and its allies had to think long and hard about this week in Vienna. But agreeing to keep a tight lid on crude oil supplies to boost prices involved some tough negotiations. Here's Paul Brennan.
Question marks going into this OPEC meeting was whether Russia would insist that the declaration of cooperation should be shorter, should go from March maybe to the middle of next year. In fact, the message coming out of this meeting from OPEC and non-OPEC nations alike is one of reassurance. What they've done is effectively amend the declaration of cooperation. It won't start from March of next year. It'll actually start from the 1st of January. They've amended it so it's a one-year agreement, and that is intended to send a message of stability and reassurance to the markets. It's likely to have the desired effect, I think. As far as rumors going around here that Russia was exerting perhaps undue influence over the negotiations and the considerations, the president of OPEC was at pains to say there is no light between himself and his Russian counterpart. He said they stand shoulder to shoulder. They are totally in alignment. And the other thing to say is that OPEC has said that, look, I know that they're going to keep this agreement in place through to the end of 2018, but if market conditions change, there will be the capacity to be nimble about it. The three driving factors, he said, in OPEC's response to the markets over the next 12 months would be the supply, the demand, and the inventories.
So joining us now from London is Dr. Manouchehr Takin, a global oil and energy consultant. Thanks for being with us. So we talk about an oil sweet spot. What do you think is that sweet spot for oil? What is the ideal price right now for both oil producers and consumers?
Well, that is, of course, a very good question, but there is no simple answer. I wish I knew. But OPEC and the oil industry in general, through its history, has always tried to balance that. If the price is too high, of course, then there will be competition to oil, and the producers will lose market share. And if the price is too low, then there will be too much demand and will be shortage of supply. And this cycle has been repeated so many times. Where we are now in the last 2-3 years has been the cycle of excess supply because of technological improvements, shale oil, and because OPEC had decided not to have any control. But since beginning of this year, the producers, which this time, interestingly, has been OPEC countries, the 14 countries, plus Russia and few other non-OPEC countries, interestingly, joined forces. And since the beginning of this year, they have reduced their supply by about 1.8 million barrels per day totally. And although people had been skeptics, observers were skeptic and negative with their outlook at the beginning, I think they all agree now, all the observers and the statistics and information show that this group of OPEC and non-OPEC have been relatively well disciplined, and they have done what they had promised, more or less. And so the prices have improved.
Nevertheless, some countries are more desperate than others to see higher prices because of the state of their economies and their budgets and so on. Which ones would you say are more desperate to see that?
I think most oil producers are. In the case of Venezuela, which comes to my mind, which has a serious financial problem, shortages of food and imports problems, but that is partly political, but in reality is the revenue of oil which has fallen in the last 2-3 years, which has put so much pressure on Venezuela. But let's not forget the richest country, Saudi Arabia itself, is also under stress because the Saudi economic policies and its budgets and so on were based on the assumption of, in 2-3 years ago, of $80, $100, $120 a barrel. And when they fell to about $40 or $30 2 years ago, of course it has put pressure and stress even on the rich country like Saudi Arabia. And so I think I wouldn't say which one, all of them are.
So what does all of this mean then for consumers? Are we going to see higher prices at the pump then? What's it going to mean for the rest of us?
Well, on the crude price, when we talk about the consumers, there are two important aspects. One is the price of crude in the international market that we are talking about, everyone knows. But another factor is the taxation on petroleum products. So when we talk about the consumers, people taking their cars and to the petrol station to fill their tanks, they are paying, in some cases, 70%, 80% tax to their own governments. In the United Kingdom, in France and Europe, in Japan, there is a high taxation. In the United States, it's probably about 30%. So I think the consumers, so to speak, would benefit when the price of crude comes down, but not to the extent that the price has fallen, $115 to about $50, $60. No, they are paying more taxes. So as far as the final consumer is concerned, in London, for example, the price hasn't gone down that much.
Good to speak with you. Manouchehr Takin joining us there from London. Thank you.
You're welcome.
All right, still to come on Counting the Cost. Financial bubbles and speculation are nothing new. We'll look at the psychology behind things like tulip mania and ask if the current Bitcoin craze is indeed a bubble waiting to burst. But first, on last week's show, we looked at how a modern-day slave trade was operating in Libya. This week, leaders there agreed to evacuate refugees and migrants facing abuse in detention camps. The plan has been drawn up at a joint EU-African Union summit in Ivory Coast. It's not clear how the deal will be enforced, but migrants are expected to be sent back mainly to their home countries. Natasha Butler reports from Abidjan.
Merci, cher frère Alassane Ouattara.
African and European Union leaders condemned the refugee slave trade in Libya. In their final statement, they promised a task force to tackle traffickers and urgently repatriate anyone who's trapped there.
There
are women and children living in inhuman conditions. We have agreed, along with the EU and the UN, to set up a task force for repatriating at least 3,800 people.
Leaders say there are more than 40 refugee camps in Libya where people are bought and sold by those with little respect for human life. Although leaders here have committed to helping refugees in Libya, there were very few details as to exactly how and when they will repatriate them. And they were also very vague about the new task force they say they'll put in place to combat people smuggling. There was also no mention of the French president's remarks to reporters that military action against traffickers is a possibility. The UN Secretary-General told summit leaders on Wednesday that new ideas are needed to deal with migration, including more legal ways to enter Europe. Is that something that you discussed and something which you would envisage?
We have to strengthen this process of legal migration, but at the same time we have to stop together illegal migration. This is I think, our common obligation.
Youth workers say until young people have real opportunities, little will change.
We want next time African leaders and European leaders to come together and say we are going to support 200, 500, 1,000 youth startups, both from Africa and from Europe, and here are the resources that we put in place. Those are practical things to do, instead of telling us in the declaration that yes, we are going to empower the young people, but how are we going to empower the young people?
There's no doubt here that ending the slave trade is an urgent priority. But unless lasting solutions are found to persuade people to stop leaving home in the first place, human rights abuses will continue to affect Africa's most vulnerable.
That's been a roller coaster week for Bitcoin, which saw values soar past an all-time high of $11,000 this week. But then they dramatically reversed lower. Bitcoin and bubble are now two words that most people use when describing the cryptocurrency. Skeptics say its value has no relation to the real financial market or the economy. Bitcoin believers say it is the future of finance. Rob Reynolds has more.
A year ago, you could buy one Bitcoin for about $730 in currency exchange sites online. Now, the same Bitcoin is worth nearly $10,000. Why?
Most likely it is because there's a lot of speculators that have seen the rapid price rise in Bitcoin and decided that this would be a good gamble for them to get in.
There have been signs the financial world has become more accepting of the virtual currency. Japan has recognized it as an official method of payment. And the world's largest derivatives exchange operator, CME Group, plans to start offering Bitcoin futures before year's end. Bitcoin's market capitalization is now larger than giant reality-based companies like Walt Disney and IBM. Investors have taken notice. Coinbase, a popular online trading platform, now has more than 13 million users, up more than 300,000 in the past week alone. Some financial experts see the rapid run-up in Bitcoin's price as a classic symptom of economic delusion.
Bitcoin is a speculative bubble. The only question is when it's going to burst and who is going to be left holding the bag. In the end, the people that are holding it will hold something that is worth nothing.
Bitcoin trading has historically been extremely volatile, with the price spiking and crashing as it did in 2013 and 2014. And Bitcoin has also been linked to crime, as hackers, narcotics sellers, and child pornography peddlers prefer the anonymity it provides for illicit transactions.
History has shown that every so often investors can get caught up in a bubble. An asset bubble happens when human emotion takes over markets. The belief that we are in a new era where the price of something can only move in one direction. This is known as the wow factor, and the higher the prices go, the more convinced investors become that they will keep going up. The bubble bursts when investors are no longer willing to buy at the inflated price, and a massive sell-off sends it into a free fall. And more recently, there have been two major bubbles, the dot-com boom and bust of the late 1990s and the housing bubble in 2007 to 2008. Now, the first recorded speculative bubble happened in Holland back in the 1600s. Tulip mania crashed horribly, taking a lot of the Dutch economy with it. So joining us now from London is Matthew Knight. He is a digital strategist and blogger. Thanks very much for being with us. How does the speculative nature of what we're seeing with Bitcoin and its price surge compare with previous bubbles?
Well, I think the difference is technology. This is not just about people who have access to trading floors and markets and auctions. It's very easy for anybody to install an application, a wallet on their phone, and just put £1 or £2 in. And I think that's what is driving a large portion of its growth. It's not too dissimilar to a lottery where you go, well, you know, I'm going to lose £1, worst case scenario, I don't get anything back from the lottery. But the benefits here, you see that pound grow to £2, £3. You know, if you'd have had money in there over 12 months ago, you'd have seen a significant return on that investment. And that compels you to say, well, maybe we put a little bit more in and continue to see that investment grow. The risk is, of course, that if there's a sudden run on those markets and people start to extract that Bitcoin and convert it back into currency, there isn't necessarily the security there to protect those investments. So where's that money going to be coming from? The reality is you can't really buy anything with Bitcoin at the moment. You have to generally convert it into another currency. There are obviously plenty of stories around dark markets and the ransomware attacks that we saw a couple of months ago being exchanged in Bitcoin and cryptocurrencies. But the reality is that the value is purely speculative. And I think when that bubble bursts, we can see a lot of people losing a significant amount of investment. I guess the difference is that you'd had a tulip bulb in the previous example, but now it's literally a virtual currency. And that's, I think, personally, another reason why I think this is such a growth curve that we're seeing. It's just a number on a screen. It's relatively easy to see it on one bank balance, having a $10 amount and then seeing it transferred to another screen. It's a little bit like playing with Monopoly money.
So what do you think drives the psychology of investors when they look at Bitcoin?
I think there is a desire to see a huge return on investment, and they are seeing that, and there's a confirmation bias in effect there. They're seeing that growth, but I think what is fueling a large amount of the market is those investors who don't necessarily have the heritage, who know how to read the markets, who know how to balance that risk. and it seems like a relatively easy investment with high rewards. The reality is that the markets just aren't normalizing. We don't know where this is going to go. The larger organizations, the hedge funds, even governments, the Japanese government seem relatively supportive of cryptocurrency, whereas China is fairly anti it. They're looking at the larger market, not just Bitcoin, but cryptocurrency at large. There's a big difference between the blockchain, the actual technology, and the cryptography which sits behind this that enables these transfer of value exchange. And I think that's not going to go away. But Bitcoin itself, it does seem to be something which is extremely volatile, but it's very easy when you're seeing large numbers being reported in the press day on day about these huge dramatic growths. We saw a $1,000 increase in value in just the case of, it was kind of 12, 24 hours. So that's very easy to just jump on and go, well, I'll have a little bit of that and see your value increase. I think the biggest challenge is it's very easy to buy portions of Bitcoin, but it's relatively hard to get that money back out of the system again.
And what's distinctive about Bitcoin as well is that it's an unregulated currency, largely. No one owns the Bitcoin network. It's not tied to any government or country. Does that add to the uncertainty about its future, or is that in fact what makes it attractive to many investors?
Yes to both questions. It certainly drives its uncertainty. I mean, Bitcoin itself has recently forked into two different versions of its own currency because of a disagreement within the developer community of who actually creates this software that allows it to exist. So yeah, there is a huge amount of volatility from the software itself, the way that the market works, from investors, from people taking money out of that system. But as you mentioned, it's deregulated, it's decentralized. I think as far as cryptocurrency is concerned, and certainly the blockchain, we are set to see that only increase in its strength and its use across private markets, potentially nations looking at how they can use cryptocurrency and the blockchain to create more secure and authentic transactions, especially across borders. That's one of the most powerful things around cryptocurrencies, is that the transfer across borders is so much easier than with currency. So it has complete validity in terms of a transfer mechanism, but there's just not enough of a secure growth and understanding of how the patterns work yet for any kind of significant investors to say this is something which we want to put as a long-term investment. It's just too risky and has many similarities to day trading at the moment.
Good to speak with you, Matthew Knight, joining us from London. Thank you.
Thank you.
While investors call Bitcoin a bubble, they are not so dismissive of the technology behind it. The idea underlying Bitcoin is called blockchain. Divya Gopalan has more on this from Hong Kong.
Hong Kong has always positioned itself on the cutting edge of the financial industry, which is why the buzzword at this annual conference is blockchain and how the entire trading world can cash in on the technology. But some warn it comes at a price.
It is posing new regulatory challenges. The speed with which technological changes are taking place are much higher than we've seen before. And secondly, new entrants which are in particular startups, but also big tech companies.
An example would be trying to contain the cryptocurrency phenomena. In 2009, Bitcoin was the first to enter the scene using blockchain technology. There are now hundreds of cryptocurrencies, and here's where the problem lies. They cannot be treated like cash. Each cryptocurrency is essentially a token for future use, and in most cases, that use has yet to be defined. So that's created a lot of speculation, making it a highly volatile investment where large gains and losses can be made very quickly. For this reason, in September, mainland China suspended the trading of cryptocurrencies and banned the launch of new ones or initial coin offerings, forcing companies like this one to shut down their trading platforms across the border. Its founder agrees new regulations are needed, but such drastic actions are not necessary in Hong Kong.
Many of blockchain industry players in Hong Kong right now, they actually came from financial background, and we share actually similar needs to the regulators. So investor protections, anti-money laundering, cyber securities.
The Hong Kong Monetary Authority has told Al Jazeera it will continue to support financial innovations in the industry and currently is unlikely to tighten regulations or follow China's lead. which is good news for the unprecedented numbers of fintech entrepreneurs setting up in Hong Kong, like Manouchehr Takin, who has just launched a blockchain company.
They apply the same regulation in Hong Kong as they did in China, then we won't be able to trade and to use cryptocurrencies anymore. But blockchain technology is not only about cryptocurrencies and exchanges, and so you can still use blockchain technology for other fields.
Experts agree. They say within 2 years, blockchain technology will touch every aspect of our lives, be it transport, banking, insurance, or just paying bills. The city now has to find a way to control some of the risks that come with this new technology without slowing down its evolution.
And finally, environmental groups have warned that the billion-dollar olive oil industry is in danger. From Italy to Tunis, Lebanon to Greece, hotter summers and unpredictable winters have seen yields decline by as much as 20%. Here's Imtiaz Tayyab.
It's a tradition almost as ancient as the civilizations that first settled these hills. For thousands of years, olives have been hand-picked across southern Lebanon, much like they are today. The fruit is a staple in Mediterranean kitchens, and olive oil is a crucial ingredient. Lebanese farmers typically press oil at their own small batch facilities. It's a complex process that sees the olive fruit washed, pitted, ground into a paste, and then pressed into a golden oil. The family has been in the business for as long as anyone can remember. He says he can't imagine doing anything else.
Olive oil is very nutritious and has so many benefits. Even God spoke about it in one of the verses in the Quran. Olive oil is medicine. It is the greatest of oils.
Modernization has made pressing olives into oil less labor-intensive and more lucrative. But in recent years, farmers have been struggling to keep up with demand.
Olive oil production is becoming an increasingly risky business across the Mediterranean, the land of its birth. According to environmentalists, climate change is leading to increasingly poor yields.
From southern Europe to North Africa to the Levant, hotter than average summers and cold winters have seen harvests shrink. According to forecasters at the International Olive Council, Mediterranean oil production has declined by around 20% when compared to averages from the decade between 2000 and 2010, delivering a major setback to the billion-dollar industry. And as the region's supply becomes increasingly unpredictable, some bottlers have started looking elsewhere for future sources of olive oil, including California, Australia, and New Zealand, something producers in Lebanon say could destroy their ancient way of life.
We are very worried about the import of olives and olive oil from abroad. We must be able to export our own harvest. I only hope our industry works to keep these markets open for us, because our oil is of the best quality.
Growing global demand for olive oil as a food and health product is also putting pressure on the mainly Mediterranean-based suppliers to produce even more. But with olive harvests continuing to decline because of the region's changing climate, it's hard to see how they'll be able to do that.
So that is our show for this week. You can get in touch with us by tweeting me at @HazemSeeker, and do use the hashtag AJCTC when you do, or drop us an email. countingthecost@aljazeera.net is our address. And there's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Hazem Seeker from the whole team here. Thanks for joining us. The news on Al Jazeera is next.